Consumer sentiment falls to its lowest level since May. Here to discuss it is Anna Rathbun of Grenadilla Advisory. Anna, consumer sentiment in the University of Michigan survey fell for a second straight month, but it's been the consumer who's propped up this economy with consistent spending. Do you see a shift on the horizon in consumer behavior?
In some ways, it's not that surprising to see consumer sentiment fall because there are a lot of uncertainties still around us. But, consumer sentiment has been low if we take a few steps back for a few years. If you go back decades, the average consumer sentiment is around 82. So, and we've been below that for a long time, and yet the consumers have still propped up the economy. So I don't really see this particular reading as something that's indicative of, taking away the resilience of consumers. And plus, remember, there are these tax cuts, tax cuts that were extended and also additionally. And come next spring, there's going to be tax refunds that will also prop up the economy. So I think there are positives to the consumer wallets that will be coming in the future that will help us.
And this is despite the fact that we saw in yesterday's consumer price index reading that inflation is drifting away and not towards the Fed's 2% annual target goal.
Yeah, but there were some things that were definitely much higher in terms of price increases, but there were also things that went down. And in the aggregate, it was higher. But I think the Fed is taking a look at PPI more closely, I would, than usual, because PPI is sort of a leading indicator of what prices might do. And the day before, it actually fell. And more importantly, the services portion, which is what the Fed is worried about, also was very, very mild. So I think going into the meeting next week for the Fed, there is a huge likelihood that they will actually end up cutting, especially with a very slow and weakening labor market.
Most traders expect that the Fed will cut by 25 basis points. Some think that it may cut by 50 basis points. You say it won't. You're sticking with 25. Why?
I think it's easier to pass a 25 basis point cut, easier to get a consensus. It's harder to get a 50 basis point consensus, especially if you take a look at all of the different commentaries that have come leading up to now. And also, 25 basis points have been sort of your given, accepted increment. But if they go 50, there is a possibility that the markets will wonder, is there something else that's wrong, that the Fed is seeing that the markets are not seeing? And it can induce a little bit of a panic.
The Trump administration is eager to have Stephen Miran confirmed as Fed governor before the meeting next week. What impact do you see this having, if any, on Fed independence?
Yeah, there's been a lot of noise around Fed independence for a while now. It's sort of unfortunate that this is happening with the confirmation as the data are pointing toward a 25 basis point cut. So it's difficult to tell, is there influence versus is it really just the data? And I think that is going to put a lot of question mark on investors. I still believe the Fed will be independent. It is one person that is coming in from the Trump administration. The rest of the Fed officials have been around for a while, and we have trusted them until now. So I don't think one person will make a huge difference in swinging the independence of the Fed one way or another.
Stocks continue to make more record highs. Would you consider what we're in a sort of momentum melt up, or is this truly based on fundamentals?
It feels like a melt up. Every day it goes up a little bit, and we continue to hit record highs in the S&P 500. Now, some of this is optimism. Some of it is, anticipation of a rate cut and potentially more for the rest of 2025. Some of it is fundamental. So even with the tariffs and all these challenges, the S&P 500 companies still manage to, perform, I guess, mid-teens, almost mid-teens year-over-year earnings growth. That's pretty impressive considering the challenges that have been around us. So I think there are some fundamentals. Now, this isn't to say that the stock market is cheap. The valuations are high. The concentration in the S&P 500 is very, very high. There is a possibility that if there is a bad news somewhere, that there may be jitters that actually spread through the markets and induce a sell-off. The higher the market goes, the more fragile it becomes to those types of bad news.